And now to our first conversation. In a market shaped by high interest rates, you see currency moves and shifting global capital flows, investors are increasingly asking one key question. Where's the smart money going in Nigeria? From equities on the Nigerian Exchange Limited to fixed income instruments and alternative assets, institutional investors are repositioning portfolios in search of yield, stability, and long-term value. But in an environment of macro uncertainty, understanding these capital flows will become critical for both local and foreign investors looking to navigate Nigeria's evolving financial landscape. Today, we take a closer look at where sophisticated investors are placing their bets and what it signals for the future of Nigerian markets. Joining me for this conversation, we have Mr. Shedrack Nokoma is a Group CFO, United Capital Group, joining me right here in the studios. Great to have you, sir. Good morning.
Good morning. Great to be here today.
Fantastic. And, definitely, I like when we try to, unpack most of these markets and, different investment vehicles at this point, because I guess, as an individual, you keep hearing about investing, saving, and somehow that is supposed to take you from where you are to where you want to be, with financial independence and all of that. Looking at Nigeria's macro snapshot, we see a monetary policy rate of 26.5% after the recent cut there by the MPC. Inflation rate, the last number, 15.10%. We're expecting, I think we should get the next, the one for February soon. Then exchange rate, 1,300 and about 76 naira to the dollar. 91-day Nigerian Treasury bill, about 15.95%. And, definitely we see a range there, if you're playing in the fixed income market. And nowadays, we have a lot of apps at this point. And I know you guys are also pushing for, digital access, into investing. If we look at the U.S. economy, over 62% of Americans are invested, in the capital market. So they don't play, with investments in that climate. Do you think Nigerians are getting more investment savvy?
Okay, thank you very much for the question, and thank you for having me on the show. My response to that question will be yes and no. So yes, because in 2025, we saw an uptake, especially in the equities market. Local investors, upped their game, investing almost 1 trillion naira in the equities market. And that signifies about 56%, growth in the equities market. And that was just between January to June. And the numbers we are seeing shows clearly that, Nigerians are beginning to play, in the investment space. But I said no, because if you look at the market, so the statistics we have shows that over 60 million Nigerians are in the betting industry.
60 million?
60 million.
Betting
industry.
Wow.
And what that signifies is that there is a strong appetite for risk. But that appetite is diversified elsewhere and not in the investment space. So what we would like to see is a situation where, we have more people coming into the equities market, coming into the fixed income market, where, your risk is somewhat, guaranteed in terms of the kind of return and the security you have on your fund compared to, the gambling, space. So clearly it shows that, one, yes, we're seeing a movement. People are playing in that market. And thanks to shows like this, the business morning shows. And at United Capital, we've also taken the bull by the horn. We have quite a lot of financial literacy programs, that we push out there into the market just to get people more educated, to understand what the market, the opportunities within the market. And
all right, so
you talked about technology.
Yeah, so sorry to come in there, but we have some gamblers out there, and in their minds, they feel like if I take a gamble on maybe a sports bet or something, I could gain a lot. I could gain 10 times my money, 100 times, depending on how big that odd is. And they'll also say, if I'm betting on a company now, buying their stock, there's also that risk that that company could maybe just go under. Maybe they didn't manage the business well. And that's another risk. And they end up losing their money, their investment. So some would say, okay, I guess gambling risk and investment risk, maybe not too different.
Yeah, it's quite different. So when you're investing, you're taking a calculated risk, right? You're investing in sound fundamentals, and that is the mistake some people make, wanting to get rich quick and all of that. But just think about it. We've had companies in the Nigerian market who have lived almost a century, right? So investing in sound, fundamentally strong companies, you can't get it wrong. But you could lose your money when you begin to place bet on
maybe Man U doesn't win.
And, just like yesterday, Man City crashed.
Man City, I saw a lot of people lost.
A lot of people lost money.
Tickets got cut.
So if you're going with that get-rich-quick mindset, you could get poor and bankrupt quickly as well if you go into that space. So what we're advocating is, steady growth, calculated risk, investing in strong fundamentals. And we believe that if you go that direction, you cannot get it wrong.
Right. All right. Talk to me about technology, things, how that's helping.
So technology has helped a great deal. Now we have a lot of platform at United Capital. We have Invest Now, where you can easily just sign on and you start investing immediately. Unlike what we used to have years back, where people who want to invest would want to walk into a company to be able to invest. Now you don't have to walk to any of our offices. All you just need to do is download the app, and then you start investing and you monitor your progress. You see how well you're doing. You see all the options and opportunities available to you in the market.
You're right. Things have really changed, because I remember personally when I was in uni, for some reason I felt like I had to invest. So I think that time Intercontinental, I think they were selling shares at that point. I did have to, I remember walking to a bank, pick up a form, I filled it. Then I also had to walk into an investment company that time too, to say, okay, I want to invest. And it was a long process. I had to be there physically, enter this office and that, but things have really changed.
Yes, really, really changed. And I think the fintech industry is beginning to change the game. And that is why most investment companies like ours, we're also following that trend, making sure that we have our presence in the digital markets just to help investors get things done easily and be able to invest their money.
Right, and definitely we know some investors that still feel like this markets, equities market is really risky when they remember the meltdowns. How some of the assets they bought are not worth anything. Right now they've not been able to recover that much. And looking at the NGX, we're at all-time highs at this point, new levels. I call it price discovery for the index, levels we've not seen before. There you have it. Month-to-date return, just for the year-to-date return, we have 25.9% already in this first quarter. Month-to-date, 1.6%. Last year, over 40% gain.
51%.
About 51%. For the index. And we know some savvy investors would say, you know what, if I was not in this market earlier, I don't want to come in now. I don't want to come in at the top. But some believe this will still keep going up. But how do you navigate this?
Okay, so looking at the 2025 performance of the index, we did about 51%. We outperformed the global market. Global market did about 25%. And that signifies, and in fact, you can describe the market to be bullish and optimistic, but then cautious, right? So even at that, we still see huge huge opportunities. You talked about the meltdown. You see, the market works late, but it would definitely correct itself at some point. Now, for those who invested then, I also invested in the market at that time. I mean, 2018, we had a meltdown. For those who stayed with the market, today they are gaining a benefit. So you can imagine, take for example, 2019, when I joined United Capital, the stock was trading at just 2 naira. Today, we're above 18 naira. So you can just do the maths. That's significant growth. We believe that that growth will continue. And the capital market presents, opportunity for you, to prove inflation. When I say proof now, like you wear bulletproof, the market presents a proof against inflation. So if inflation goes up, you have a market that helps you to protect your money. So we believe that the trajectory is up.
And definitely for some that might want to invest, they have that urge, to actually come into these markets, but there's a cost of living crisis. We've seen the currency, our local currency, devalue a lot, in my mind, I'm still at levels around, 400 naira to the dollar, 300. I miss those times. And I know a lot of people, miss those times too, but that has created a lot of poverty, especially when you see wage growth not matching the inflation rate and devaluation, even though inflation has come down, due to rebasing. So as someone that wants to invest, and maybe, my wage growth is not that great, disposable income, not that great, but I want to invest. But at the same time, I want to eat. I have to take care of expenses right now. How do you balance that?
Yeah, you're absolutely correct. But the interesting thing is this. So look at the market. After the government policy, removing fuel subsidy and then floating the naira, that brought hardship. But in the midst of that hardship, we've seen the market, the investing market grow. We've seen the equities market grow. We just talked about it, 51% growth. Inflation was a key driver of that growth, right, in two ways. One, valuation definitely will go up. Two, people needed to protect the little they have gathered. They needed to prove it, kind of. And so the little you're able to get, you put a little stipend, in the equities market, for example.
Okay, so let's say I earn maybe 100K, I still have to pay rent, I still have to, take care of maybe school fees and, all of that, or maybe I'm on 300 or 200,000.
Yeah.
How much of that do I get to invest? Knowing that fuel prices have risen again, at this point.
Yeah, so, and that is one of the reasons why we come on shows like this, to educate people. You don't eat everything you earn. So typically you plan. You set out a portion of your earnings to invest for the rainy days. So if you've not been doing that, I mean, this is the good time, those of our listeners there, to set aside part of what you're earning to invest. Otherwise, you end up eating everything and you live in penury. So you must make deliberate efforts, to set aside a part, even if it is 1,000 naira. So for example, we talk about this, people are still buying recharge cards, people are still going on their phones and doing a lot.
So many subscriptions.
Yes,
you
subscription everywhere.
So many things, yeah.
That 1,000, and that's why we have mutual funds at United Capital, where you can just set aside 1,000 naira, 5,000 naira, invest, and you watch your investment grow with time. So it's important for us to understand this, that you don't just eat everything that you earn. Set aside something.
It's quite interesting. Some will say, these are the hardest times, because maybe in our fathers' days, you see they had like 10 children, they were able to take care of all of them, own a home, and, do things. But now, these are quite interesting times. Well, let's look at you. You're listed on the stock market. You also released your earnings, revenue, 58.4 billion, up by 34.81% year on year. Gross profit, 34.81% higher year on year. Operating profit 43% higher. Earnings per share, that's up 16%. Total assets up 3.51% year on year. And you're in financial services. How are you able to deliver this result?
Okay, for us, 2025 was quite a tough year. I cannot talk about our numbers without, referring or looking back, and to also remember lionesses and lions that fell, as a result of the fire incident that occurred at our office. We remember them fondly. So 2025, and again, I want to also say that for our colleagues who have been resilient and they've remained strong, we acknowledge you. 2025, was tough. In fact, as a result of that incident, we lost a whole quarter. But even at that, we were able to turn out the numbers that you have just rolled out. We grew revenue by 35%, to close the year at 58.5 billion naira. It's quite significant. Profit before tax, we closed at 41.2 billion, growing at 37% year on year. Quite significant. And those numbers are great and exciting. And what this shows is that we are poised even to do better in the coming year. What drove this performance? I think we had significant growth in our fees and commission income. Again, that speaks to the fact that people are taking interest in investing, because we earn fees just by growing the number of people that come into, to invest. Saw significant growth, 59% growth in our fees and commission income, and that is the core of our business. And that shows that we are a strong business, and we are well positioned to continue to drive and sustain the kind of growth that we have recorded in 2025.
All right, definitely. I'm sure investors will be looking out for 2026 and also the forecast coming for this year. But thank you so much. It was great having your perspective, Mr. Shedrack Nokoma, as a Group CFO, United Capital Group. Thank you for coming on the show today.
Thank you for having me.
Fantastic. All right, so we see trade experts believe that increasing women's participation in agribusiness exports remains key to strengthening the agricultural value chain, boosting economic growth, and promoting inclusive development. The call was made at the World Trade Organization Women in Agribusiness Trade and Export Conference in Abuja. The chairperson of the organization in Nigeria, Professor Ngozi Egbuna, says putting women at the forefront of global export activities will help unlock new opportunities and expand Nigeria's agricultural value chain. Take a listen.